Good morning. Welcome to Money Talks, your intel on Philippine markets and the economy. I'm Regina Lay. In the headlines today, Typhoon Tino leaves at least 114 people dead in its wake, with Cebu bearing the brunt of it. Hundreds more remain missing as rescuers scramble to find survivors. The ICT Secretary Henry Aguda says he's expecting more telcos in the country soon now that the implementing rules for Konektadong Pinoy have been approved. And Philippine stocks have fallen to multi-year lows off the back of bad news, but are they now bargains or value traps? We'll discuss that with banker and Maharlika Fund Independent Director Cathy Yang later in the program. Good morning. Just the latest on the latest disaster that's hit the Philippines. At least 114 people have died in the aftermath of Typhoon Tino. Cebu recorded the highest number of fatalities at over 100, with most of the deaths linked to flooding, landslides, and falling debris. As of 6 a.m. today, 82 people were reported injured and 127 remain missing. The NDRRMC says there could be more casualties as rescue and recovery operations continue. Many towns in Cebu are now reportedly still without power and water supply. The province is now under a state of calamity, with nearly 40,000 families still in evacuation centers. Under EO 68, Governor Pam Baricuatro can now impose a price freeze to prevent profiteering and authorize the use of quick response funds in emergency relief. Typhoon Tino has actually left Philippine territory and is now moving northwest of Pag-asa Island in Kalayaan, Palawan. However, Pag-asa is monitoring another cyclone at this point. Now it's called Tropical Storm Fong Wong, which has intensified and is expected to enter Philippine area of responsibility late Friday or early Saturday. And once it does, it will be named Uwan. It may make landfall over northern or central Luzon by Monday, potentially as a super typhoon. For now, Tino's trough continues to bring rains over Palawan, the Zamboanga Peninsula, Aurora, Quezon, Basilan, and Tawi-Tawi. And the Amihan, shear line, and localized thunderstorms are also causing scattered rains in other parts of the country. As recovery efforts continue, the House of Representatives has expressed its sympathies to the victims of Typhoon Tino. In a statement, Speaker Boji D said representatives from affected districts are closely coordinating with national agencies and local governments to deliver immediate aid. He also said that Congress stands ready to allocate funds and support rehabilitation programs. On to business news now, and up to 7 foreign players are planning to enter the Philippine telco sector now that the IRR of Konektadong Pinoy law has been approved. That is according to DICT Secretary Henry Aguda. He didn't name these firms but said most of them are in fiber connection. Aguda estimates that reaching 100,000 cell sites for full fiberization will need new players to invest at least $1.5 billion each. The Konektadong Pinoy Act, which lapsed into law in August, streamlines the licensing process for new entrants. Major telcos previously warned that the law carries cybersecurity and national security risks, pushing them to be more involved in the crafting of the IRR. And now Aguda believes the IRR has addressed all these concerns and that it promotes, the IRR actually promotes asset sharing between current and new players, as well as transparency in pricing and through the regular publication of updated pricing information. Sought for comment, PLDT and Smart Chair and CEO Manuel V. Pangilinan told Business World that in the end, perhaps Konektadong Pinoy was not as bad as his group expected. PLDT previously signaled a willingness to challenge the law before the Supreme Court. Finance Secretary Ralph Recto reiterated that he's against a total ban on online gambling. He told Business World that the sector can still boost the economy provided its social impacts are kept in check through stricter regulation. This is in response to DepDev's earlier call for tighter regulations and even a possible ban, citing the industry's huge social costs and minimal economic gains. DepDev estimates showed the e-gaming sector contributed nearly 82 billion pesos or about 0.4% to GDP last year. Recto, however, maintained that a cost-benefit analysis shows that e-gaming can have a net positive effect if negative externalities are properly managed. He called for a holistic approach to gambling regulation, something which PAGCOR also wants. PAGCOR says it collected 37 billion pesos from e-gaming platforms in the first 7 months of the year. Well, there's been a lot of teeth gnashing since an article was published by Bloomberg and later picked up by regional papers like the South China Morning Post, saying the Philippines is the worst stock market in the world. Is that a fair assessment? Let's get some insights now from Cathy Yang, a retired investment banker and now an independent director of the Maharlika Investment Corporation. Good morning, Stevie. Thanks for joining us this morning.
Thank you for inviting me. It's an honor.
We always call you in on big days when we need to make sense of a lot of things. And let me kick off with the stock market. I'm sure you read the report, the article saying the Philippines was the worst stock market in the world, which to me is actually a bit of a misnomer because I'm sure there are worse performing stock markets somewhere in Africa, right? But in any case...
Not necessarily, because if they're thinly traded, they may not move up and down. Just like, for example, let's say there's a big move upwards or downwards. Who are the stocks that move the most?
Yeah.
The liquid ones. The illiquid, let's say, for example, I have a stock that I like. I'm tempted to sell it if it goes up, but if it's relatively illiquid and I like my position, I don't sell it.
Yeah.
Times are bad, I'd like to sell it, but nobody wants to buy it. So then it moves less. There may be smaller stock markets, but because they're small, they're not as liquid, and therefore they're not as volatile because there isn't that much trading. So I mean, so I just want to clarify your observation.
That is a very good point, but the Philippines also is rather illiquid in its own way. And actually, you wrote an interesting article titled Bargain or Value Trap in relation to the Philippine equities, especially when you compare it with our regional peers. Give us the gist of that.
Okay, the gist is twofold. Well, threefold. One, the stock market can only reflect the economy. And if we have an imbalanced economy, what has driven most other stock markets up in the last year, which we are woefully not just underperforming, but going in the opposite direction? Number one is tech. Number two is manufacturing. And we have neither. Manufacturing is just food processing, which we have very successful, prominent companies, but that's it. Tech, we have BPOs, but they're all foreign owned. So there's no investment play in it. That's why the biggest gainer in Asia was South Korea because of their extremely robust tech sector, and Taiwan. And that's why the correction now, they're going down more, but from very lofty heights. So you cannot create what does not exist and wonder why, what is causing excitement. I mean, like, in the NASDAQ, they talk about the Magnificent Seven. We have the Magnificent Nothing because we have no tech. Of NVIDIA is Taiwan Semiconductor, TSMC. That's listed in Taiwan, and that's doing very well. And the same thing with Korea. It's not just the people, it's not just Samsung Electronics. It's a lot of the supply chain feeding into Samsung Electronics. So never mind, we don't have a Magnificent Seven, but we don't even have the feeder companies that feed into that. So how can we participate when people have complained in the US that about 50% of the gain is from the Magnificent Seven? We have nothing that participates with the Magnificent Seven. That's number one. Number two is manufacturing. Because of trades, the people who have robust domestic manufacturing, like Germany, like, never mind just on exporters. We don't have that either. So how can we participate when the two sectors which are driving gains are sectors we are largely absent in? That's one. Number two, frankly, is liquidity. All right? why do you buy a stock? Because you can buy it. And when you want to sell it, you can sell it. But if liquidity is very poor, why will you even buy if you're worried that when you want to sell, you won't be able to unwind it? If you're buying an illiquid stock, just buying a position of a few $1 million might drive the stock price up, and selling it might drive the stock price down. While if it's a very liquid stock, it will just be part of the flow. Number three, why do we have very poor liquidity besides number one and two? This is the real issue that affects both. We are really reliant on foreign buying and selling, and that's already so low. All the other markets I've covered, like in the Philippines, when I was still on the underwriting and advising business for IPOs, if it's over 100 million in the Philippines, you basically need an international underwriter and placing. It's very, very hard to do something north of 100 million just with the local market. In even the other Southeast Asian markets, let's not even talk about Hong Kong and Singapore. Let's just even talk Malaysia, Thailand, Indonesia. It's like 200, $300 billion, the IPO size before they go international because the domestic buyers can pick it up.
Yeah.
Now, so first, we don't have domestic buyers I mean, it's really tiny compared to them. But number two, that affects the second and third line stocks.
Yeah.
You don't expect the foreign buyers, the institutions, to buy second and third tier stocks unless a specific small cap or an industry specific fund. Who buys it in the other markets? Domestic investors and domestic funds.
Right.
And in those markets, they're anywhere from 60 to 80%
Yeah.
of total volume. In the Philippines, local is 20 to 40% of the volume.
Right. Yeah.
So, and they still buy the big stocks. So now you have this liquidity squeeze,
Yeah.
and you have companies which are listed
Yeah.
but have no trading.
So it's a shallow market and it's illiquid. But let me focus on one thing you also wrote about, which is the corruption scandal and how the macro is now trumping the micro. Micro meaning the performance of these individual companies, right?
Yeah.
And you argue that what will determine whether these are bargains or value traps is what happens with the investigation of the flood control scandal. If it's something that we're able to address and leaves the people satisfied, then it could be a bargain. Walk us through that argument.
The argument is this: by objective valuations, we're not just trading at 52-week lows. For really blue chip of the bluest companies, they're trading at 5, 10-year lows, not on the price, but on the valuation metrics. For example, let's look at basically, let's use four neutral names: uh, BDO, BPI, San Miguel, and let's say PLDT. Four names, all different owners, all different industries. They're all trading at multiple year valuation lows. All right. Basically, BDO is trading at about 1.12 book. A few years ago, it was close to 2. BPI is trading at 1.18 book. A few years ago, it was 2. Now, PLDT is trading at an 8% yield. A few years ago, it was trading at a 5% yield. San Miguel is basically trading at less than $3 billion, and it was more than double that a few years ago. Now, so these are definitely these four companies, very resilient. Even if the earnings doesn't grow as fast as you want, they will not suffer. They will not shut down. They will deliver dividends, and the dividend yield they're giving is quite respectable or high right now. So if this is a bargain, there will be a reversion, even if you revert it to halfway where it was a few years ago. That's already a 50% capital gain. Now, what happens if the macro is not satisfactory? Nobody will come in, but people will be seeking to go out. And then it becomes even cheaper. Now, if for people who are old enough to remember the 1997 crisis, you had people who got cheap and cheaper and cheaper. And then the strong ones found a way to survive by changing their strategy, by adjusting. The the weaker ones, the weaker ones basically no longer exist. So
Yeah.
that's the difference between a value trap and a bargain.
Yeah. That's I guess that's what they say as well, that a lot of the times externalities. I mean, these companies can't do much about the externalities part of things, right?
Exactly. I
But
mean, they can't abandon the country. So
yeah,
therefore, what happens is dependent on what happens in the country. So
exactly.
they can
It's it's beyond their control. But Steve,
exactly.
I'm running out of time here, but I did want to ask one last question, which is there was a left of field idea before a few weeks ago for the Maharlika Sovereign Wealth Fund to start buying local equities as a way to
No,
prop it up, which I know you're
no.
against, but tell us why. And of course, that's notwithstanding your own role as an independent director now
Yeah.
of the Sovereign Wealth
Now,
Fund.
first of all, I hate to say this. I wish people would stop asking that because it shows they don't think hard. What are what are they saying? Prop up the stock market. Are we propping it up or just transferring illiquidity from one hand to another hand and hoping the person can hold? Because let's assume we use all our $2 billion and buy stocks across the board. What have we accomplished? We've bailed out some people who are unfortunate, and many of them, it's not their fault, in a position of illiquidity.
Yep.
Have we improved the economy? What's the exit? Nothing. So unless we do fundamental reforms in liquidity, in trading, everything, all we're doing is turning Maharlika and to a bailout fund. What is Maharlika supposed to do? Foster development, inclusive growth, which will have a multiplier effect. As I've given a simple example, one of the biggest priorities which Maharlika is working on is improving the transmission grid in some important islands which are not in the first tier of what NGCP is supposed to address. Now, some of these islands have weekly brownouts, terrible voltage fluctuations, transformers that burst because of voltage fluctuations and outages and all that. If we can fix that by having a proper transmission grid, not only is it good for the province, it will bring lower power costs and more reliable, it will spur tourism, it will spur investments, it will spur agricultural development. Now that has a multiplier effect. Now you tell me, what should I do? Buy
Right.
second and third tier stocks or do that?
Right, but that's a long-term tactic, if you will. I mean, I guess the
Okay,
question
let's
that
assume
people,
short-term
yeah,
tactic. Okay, let's take your point.
yeah,
First of all, I'm tired of this short-term thinking because that's why we have all these long-term
very
problems.
fair point. Yes.
Okay, but never mind. Even as a short-term tactic, you tell me, Maharlika uses its 2 billion and buys stocks across the board. What have we sold besides taking stocks off hands of people who
Yeah.
are regret buying it? What have I added? What has Maharlika done to help the country with the 2 billion besides bailing out some people? Now, okay, they might use their money to invest in other things. So I'm not saying there's no positive effect, but what is the multiplier benefit effect even in the short term?
Could the argument be made that it would at least send a signal to foreign investors of a
You think they're
confidence in local
stupid?
stocks?
Do you think they're stupid? What? They'll say, this guy bought it. He'll probably want to sell it eventually. In the
Yeah.
meantime, what has changed in the fundamentals of the company? What has changed in the liquidity of the stocks? What has changed? We have just transferred illiquidity from one hand to another.
Yeah.
So you want to work as a bailout fund? Fine. Analyze the effects of that. You want to deal with fundamental issues to address illiquidity, address trading, address all that. Then, like Singapore had that issue. And the sovereign wealth funds there have done it. But please, to the people crying for the GFIs, including Maharlika, to use its valuable money as a bailout fund, look at what Singapore did with that together before they addressed that. They looked at liquidity enhancing measures. They created funds so that these can be wrapped around and sold to retirement funds. There were fundamental things done rather than nahihirapan na ako, saklolo,
Yeah. Yes.
which is all it is.
Yeah, I actually agree. And that's why I said it was a left field suggestion. But of course, I had to
Well,
put it.
it's a lousy suggestion. I'm sorry.
Yeah, I had to put it to you to give us some insight on that.
No, but I wanted to explain why. It's
Yeah.
not just, oh, Maharlika's hoarding its money,
Oh,
GSIS and CSI. No, I'm saying
oh.
there is a proper use of the money,
Yeah.
which of Maharlika. I'm not speaking for the other GFIs
Yeah.
because the SSS and GSIS regularly buy and sell stock. So
Yes.
their position is different.
Yes.
They are there to provide retirement benefits to their members.
Yeah.
And stocks are part of that. But Maharlika is there to spur development and have a multiplier effect.
You're
It is
right.
not-
That is a word I've heard used as well, hoarding. That there is some bit of a misconception that the GFIs are hoarding all of this cash piles when they could be putting it to use. But you're absolutely great points that you made, that there is a proper use for the money. So we'll leave the conversation there because I know you have to run to another meeting. But thank you so much for your time and your insights today. That's Cathy Yang, Independent Director of Maharlika Investment Corporation, but also a retired investment banker. Thanks, Stevie. Okay, we're gonna pause for a quick break, but coming right up on Money Talks, the Philippine Stock Exchange Index unfortunately sank to a 3-year intraday low before Wednesday's close. We'll take a closer look at what happened there after the break. Keep it here on One News. Welcome back to Money Talks. I'm Regina Lay. In corporate news, PLDT, we were just talking about it, expects stronger third quarter revenues driven by its digital bank Maya and its home and enterprise businesses. That is according to Chair and CEO Manuel Panglinan. On the sidelines of the launch of SmartSafe, its new anti-scamming program, the PLDT chief said the company's performance this quarter looks slightly better than the previous ones. The telco giant is set to release third quarter results next week.
Maya, although slightly affected by the delinking from the gaming sites, the profits for the third quarter, but revenues of both home and enterprise were up in the third quarter.
In the first half, PLDT's net income fell by nearly 1.5% on year as expenses outpaced revenue. Still, its second quarter profit climbed 6% on steady core performance. SmartSafe, by the way, is a PLDT smart programming interface that lets users authenticate online transactions without the need for OTPs or one-time passwords. They call this feature silent access, and executives say this will minimize fraud related to OTPs.
At the heart of SmartSafe is silent access. Every login, every transaction, and every interaction is verified quietly within our network. Security starts even before fraud can happen.
PLDT and Signal, the owner of this channel, are both part of the MVP group. Just a very quick disclosure. In other earnings news, Mondi Nissin posted a 13.4% jump in Q3 net income, taking it to 2.3 billion pesos for the quarter. The manufacturer got a boost from foreign exchange gains, but also said it saw steady growth in the core food business despite weakness in its alternative meat segment and rising edible oil costs. For the 9 months to September, Monde Nissin's reported net income rose nearly 10% to 6.7 billion pesos. All right, off the back of the earnings reports starting to come in, let's take a closer look now at the rest of the markets. The PCI opened Thursday higher, just by 0.25%, sitting at 58.33. 0.88 at the moment, but remember, we're coming off a dismal performance yesterday. The local bourse sank to a 3-year intraday low before closing yesterday above the 5,800 level. It hit as low as 58.18 at one point. Markets, of course, as we were just saying, facing heavy selling pressure, and this was corroborated by Regina Capital, saying that despite inflation figures still coming in below the BSP's target range, there just aren't enough positive catalysts around. DepDev Chief Arsenio Balisacan, for one, is keeping a strong front. In a statement sent by Palace Press Officer Claire Castro, Balisacan said that the bourse only reacts to, quote, noises and does not capture the medium and long-term health of the economy. That's also likely coming off the back of the international articles saying that the Philippines is now the worst stock market in the world. Analysts will now be watching Maynilad's mega IPO tomorrow, which is seen as a key test of investor appetite. Investors will also be digesting third quarter GDP figures, also to be released tomorrow. And unfortunately, most economists that were polled by Business World expect the economy to have slowed, mainly due to the corruption scandal and successive typhoons. In fact, there's every expectation now that growth could come in under 5%. As for the Philippine peso, it's opened today a tad stronger, sitting at 58.72 to the dollar. But again, it also had a pretty dismal performance yesterday, closing at 58.83 against the greenback. That's also a multi-year low. And 10-year government bond yields ticked up to 6.003% at the moment. Just very marginal gains there. Part of the reason Philippine equities are seeing weaker performances these last few days is because of the weak signal from the U.S., but the markets in the U.S. rebounding on Wednesday after fears of an AI bubble initially led to massive sell-offs earlier this week. So if you take a look at the NASDAQ, it's jumping 0.6%, whilst the Dow climbed by nearly 0.5%, and the S&P advanced by 0.33%. But again, that's the rebound that we're seeing at this point after a bit of a selling pressure earlier in the week, after a few bank CEOs warned that there could be a drawdown in stocks over the coming year. Benchmark 10-year Treasury yields ticking up to 4.156%, while gold prices inching slightly up to $39.80 per troy ounce. Remember, at one point it hit as much as $4,200 per troy ounce. So it's now being pulling back, with a few investors taking profits after those highs. U.S. futures pointing to slight declines when the markets open later tonight, as expected. There's a bit of a profit taking that we're seeing at this point. NASDAQ falling by 0.25% in futures, and both the S&P and the Dow tumbling by 0.1% as well. Not surprisingly, Asian markets are tracking Wall Street this Thursday. Japan's Nikkei 225 has risen over 1% now. Riding on that rebound from overnight from Wall Street. South Korea's Kospi climbing by 0.5%, and Australia's AXS inching up by 0.33%. Greens across the board, at least in the Asian markets this morning. We'll see if that translates to local equities. And that's it For Money Talks today, again, I'm Regina Lake. Catch us again tomorrow, 9:30 a.m. here in One News. It's going to be a big day tomorrow. We've got the Maynilad IPO and GDP for the third quarter coming in the morning. So we're also streamed live also on YouTube and our Facebook channels. Have a great day ahead.